Welcome to BizTech's C-Suite Conversation Show, the show where we feature companies operating globally, talking about their solutions and how they make a difference with their customers' businesses. Now, today we speak to Raheel Iqbal, Managing Partner at Codebase Technologies. Codebase Technologies is one of the world's fastest growing open API banking solutions providers. Now, Raheel, welcome to the show.
Thank you, Brian, for having me on the show.
Now, Raheel, for a start, could you tell us about Codebase Technologies and a little bit about your history?
Great. So Codebase Technologies, as you mentioned, is one of the fastest growing open API solution provider. We work with traditional banks to make them digital, and we work with challenger institutions to help set up neobanks in the region. We've been in this business for over 2 decades, and we've been helping institutions how they can actually implement enterprise technology and progressive technology within their financial services business.
For a start, then tell us about Open API and what your products and solutions suite look like.
So basically, when we talk about Open API, it's a very simple concept where banks and institutions which are not financial service providers should be able to communicate about their customers. So the customers today, like yourself and myself, as consumers, we hold bank accounts, we hold credit cards, we hold loans with multiple institutions. And today we are at a disadvantage. Why? Because our institutions or our banks do not share data with each other for us to make a better, a more informed decision about our financial well-being. Where are we spending? What are we doing with our money, and how can we grow our wealth more efficiently? So there are fintechs and there are institutions or new technology startups who need access to such data to help consumers like us to able to help them manage their budgets, to wealth enhancement. So an open API model or a framework is basically to allow such technology startups to get access to consumer data only through the consent of the consumer, by the way, through these financial institutions. So if you look at the history, look at Europe, look at UK, look at Asia Pacific, where the governments and the financial regulator brought in a framework, a secured framework, where institutions like banks have to share the data of their consumers based on the consumer consent to allow such technology startups to mine that information and to give better recommendation to their customers. So Open API is a simplistic format of allowing data to be utilized by various fintechs and various startups.
So Raheel, then what does your APAC footprint look like, and who are some of your key customers in the region?
So APAC is a very strategic market for us. We value APAC, be it from an ASEAN country perspective, all the way from Pakistan to Australasia. We look at because of the underbanked population, number one, the underserved markets. These markets have traditionally been served by large conglomerate banks, which have not been able to satisfy the customer need in the region. And we feel that there's a huge opportunity for institutions to basically start serving underbanked, underserved population in Asia Pacific. So we've regionally headquartered ourselves in Singapore with a presence in Malaysia. Our people are based out of Indonesia as well, one of the largest markets over there. And our focus is actually all the upcoming emerging markets within the APAC. So not just the mature markets like Singapore, Malaysia, but also looking at Vietnam, Philippines, and the regional markets where there is a huge opportunity for us to actually deliver our services.
Give us an example of how you've enabled some of your key customers to really exploit this opportunity with the unbanked and underbanked.
So I'll give you a very recent example from a MENA region perspective, and that's what we're trying to bring those concepts to APAC. Recently, we launched a full neo-challenger bank in Jordan and Iraq for a traditional bank. They were a traditional bank. They wanted to serve the population, which is either underbanked or not banked at all. Youth, the problem with how to support the youth programs, how to support the lower class of income groups. So basically, we joined forces with our client to help them actually bring a full digital institution, which would be able to open their bank accounts in under 3 minutes and give them a credit line like a credit card or a buy now pay later scheme or any other credit product under 2 minutes, with all the security, with all the benefits and all the risk management available to a traditional bank. So we fully digitize their process. Where a bank used to take approximately 3 weeks to undertake a credit card application, now they do it in 2 minutes. And imagine the operational efficiency we bring to the market, and the access. People used to come to the branches. You may have 10 branches or 20 branches in a population of what, 50 million, right? Now, all of that population is accessible on their phones. So you don't need to invest in branches, and we make it more accessible, more easier for people to come and understand what are the offering, how can they benefit from it. And that's what we're trying to bring to the APAC market. Efficiency for banks, challenger institutions being able to deliver the promise of being nimble, being agile, and being able to deliver on the promise of servicing underbanked customers.
There are a lot of solutions like yours out there in the market competing in this space, because this is relatively, in some parts of Asia Pac, really still white space. What's your company's value propositions versus the competition?
So we don't see ourselves as a technology software provider. We look at ourselves as an enabler. So we would work with our institution partners. So we don't consider them as clients. We work as partners. And we bring not just the technology, but the know-how of the business itself. How to construct a product, what product should be marketed, what should be brought to the people, understanding the personas of what the market is looking for, how to help institutions build propositions. So we are beyond technology. You can buy technology off the shelf from any vendor. So we are not that vendor. We basically come, we help institutions design their business, help them go to market, and help them actually continue to support the evolution, because digital banking or neo-challenger banking is on an evolutionary phase. It is not one size fit all. That's the problem. What other technology vendors fail to understand is that, okay, I can give my technology to 10 people, but not every proposition, not every digital challenger bank is looking for the same thing. And that's where we curate and we co-create products with our clients and with our partners. And that basically keeps us a differentiating factor from any of our peers.
Okay, so Raheel, I'm going to take you up on that, and let's take a macro view on digital banking in the APAC region. Which of the markets you see the highest increase in demand for digital banking services?
So if you look at from an APAC perspective, all the emerging markets have seen exponential growth. As you've seen in 2020 alone, they added around 124 million new customers across these markets, which is basically now around sitting at 400 odd million customers on a digital banking platform. The growth apparently comes from emerging markets, low tier markets. However, in APAC, the biggest difference, which we will see, and we are seeing actually, is coming from mature markets like Singapore, like Hong Kong. And if you see big institutions investing into challenger institutions, the likes of Standard Chartered, the likes of big names, likes of DBS, because they really value, they're now seeing the opportunity that not just the emerging markets, but also these mature markets still have white space available, and they can actually transform even the mature markets.
So that's an interesting thing, because that will then is counterintuitive. What they're trying to do is not just protect their turf, but go on the attack, isn't it? Because essentially then they're launching their own challenger banks.
See, they were a bit slow to understand this the space, but when they saw the growth of the fintechs and the challenger institution in the region, the big names have already started to protect. Of course, yes, that's the first objective, to protect the business, but also they have the power to actually become an aggressive competitor to these challenging institutions. However, you have to understand one thing, Brian. The key success factor within the digital challenger institution, which a lot of people fail to understand, is the mindset, and is the ability. You can buy technology, you can buy products, you can basically bring in the most expensive people, but unless your institutional mindset is not about to change what you're doing, you will not succeed. And that's where the biggest challenge will come to these traditional banks who are competing with fintechs, who have a different mindset. They have a different culture altogether. They think differently. They don't think like a bureaucracy. And the banks who are coming into this space, they need to be careful on how they manage this cultural mindset shift.
So, and that's an interesting point, because if you look at execution, then one of the ways that, as you correctly pointed out, some of the traditional banks are approaching it is basically to set up a challenger bank in order to then populate that with people of a different mindset to go after that white space. And white space there is, because in markets like the Philippines, in markets like Indonesia, in markets like Vietnam, there's huge swathes because of the geographical spread of population, huge swathes of underbanked and unbanked customers that they would never be traditionally able to reach in a profitable manner.
Correct. Yes. And if you see, there are two models which the banks have been adopting typically. One is doing a digital bank within itself, within the institution, or carving out that digital institution completely, so they have some kind of autonomy, so that they can make their own decision, they can work on their own cultural style or cultural mindset fit. So yes, that is important. And even looking beyond these large populous markets or large area market, what we call like Indonesia, Philippines, where it's very difficult and very costly to reach out customers, digital is the only effective tool to basically be profitable, be able to reach them at the right time, at the right place, at the right cost, right? So that is the case. But even if you look at markets like markets like Singapore, markets like Hong Kong, smaller, closer markets, Malaysia for example, digital banks will be much more successful over there as well. And there's a huge opportunity, not just because of the area's access, but also because of people in these markets are much more technology savvy, and they are expecting much beyond what their current banks are servicing. So unfortunately, the banks, the big banks in the region, have still be more traditional. They have taken this traditional conservative approach, which needs to change with the new millennial and Gen Zs and Gen Ys coming into the picture. So hence, even these mature markets are a huge white space for financial institutions to actually benefit from.
So essentially what you're saying is, in these mature markets, the challenger banks will cannibalize the slower moving traditional banks.
Yes, definitely, because they are already mature banking markets. However, they're underserved from our perspective. So the share of wallet will start moving from a traditional banks to more towards challenger institutions.
Okay, so Raheel, give us an insight, because you obviously have a global view. From a MENA perspective and an APAC perspective, what are some of the lessons that we can take really from execution of digital banks? Some of the things that people have done really well, and perhaps each region can learn from each other from specific examples.
See, there are always challenges. And as I mentioned, the challenger banks or neobanks are on an evolutionary phase. So people are trying and testing models from different markets, be it from UK, Europe, US, MENA, Asia Pacific. Everyone has done their bits towards contributing what can be learned from those challenges, or what could be the potential pitfalls for such institution. when we look at our clients and our potential prospects, one thing becomes very common is the ability to go to market faster. If you are not faster to the market, you will lose the opportunity, because technology reduces the time what you have to go as compared to a traditional launch. In a traditional environment, banks used to take a year, 2 years to launch their products. But with technology today, a challenger institution can come to market in 2 months' time and take up the first mover advantage. So the biggest challenge which traditional institutions face is their ability to go to market faster and with that cultural shift. Now, we help traditional institutions achieve that. We were able to launch a full neo challenger institution in less than 4 months. And that's where the major benefit comes. The faster you go to market, the more you're adaptable, the more insights you will gather, and you'll be able to adapt and change much faster. So that's where one challenge always remain. And if you compare it with the neobanks or who are challenger institutions, they also have taken too much time in these markets to come and launch. Could be due to regulatory concerns, due to some other issues, but they also need to understand, if you're not in the market, you're out of the market. And if you do not come to the market faster, someone else will come and take up that market.
Now, Raheel, you brought a very interesting point there around the regulatory environment. The regulatory framework is really a linchpin in enabling these challenger and neobanks to function. What are you seeing, or give us your insights in the MENA and APAC region in terms of the countries that are perhaps in the forefront of the pushing the regulatory envelope?
See, Asia Pacific have been much more progressive. Certain markets, the mature markets, picked it up and they were much more progressive to allow such kind of regulatory changes and regulatory push. As you rightly mentioned, the regulatory concerns are basically the foundational push which is required to be successful. And MENA region have been coming onto that bandwagon a bit slower in our view. But for example, countries like Bahrain, they have been progressive, and being the leader in the region. Open banking, digital banking have been introduced back in 2018, 2019. The UAE market, they introduced digital banking, and the rest of the market is picking up the pace. But if you look and if you compare these regions as to Europe and UK and Europe took this decision very soon. It was taken a decision that how can they ensure that the competition, the level of competition remains higher for the high street banks, and they took that decision faster. And you can see today's where they stand and what benefit they have reaped. But I think APAC and MENA region are catching up on that train.
Now, looking through a crystal ball, Raheel, tell us about what are some of the key trends that are shaping digital banking in APAC and MENA in 2022 and 2023.
So we still have a lot of space right now in terms of challenger institution offering the basic financial services to customers. Still a large population is underserved or do not have access to financial services. So that remains a key trend, launching institutions to be able to attract and to basically provide access to financial services. For mature institutions in the challenger space, we see buy now, pay later coming in as a new trend. We see a good trend coming from the UK and Europe side all the way to the MENA and the APAC. We've seen a lot of investment happening in the buy now, pay later schemes, and challenger institutions can actually fast track the BNPL schemes as compared to traditional credit, like a personal loan or a house loan and so forth. So that is one of the key trends we are looking at in Asia Pacific market at the moment. In addition to that, instant lending other than buy now, pay later for other purposes, will remain a top priority because if a challenger institution needs to be profitable, they need to be in the lending business. And hence the lending area become a key supporter for growth and to acquire customers as well.
Now, I want to zoom in on Raheel, the individual right now. You have an interesting background. I noticed that you're a very passionate investor in startups. Tell us about this and your role as an angel investor and what drives you to do that.
So I support fintechs and technology startups in the region by coming up with my experience in the industry for almost more than 20 years now within the financial services industry, helping these technology startups understand how the industry works, how I can basically enable them on the go-to-market plans. So typically what I do is I look basically these institutions or these fintech startups come to us for investments. We help them in establishing a much more robust technology space for them. And then we advise them on how they can go or how they can compete with their counterparts in the traditional business. They do offer me a lot of board representations and an advisory role capacity. And I've been supporting the growth of the fintechs in the region by not just by investing, but also by connecting them into our traditional client network for them to increase their presence. So it's a win-win situation for everyone where we are able to help these fintech startups go to market faster and get connected, because we believe in collaboration. Traditional institutions can benefit from the fintech startups, and the fintech startups can benefit from these traditional institutions if they work on a collaboration model. And that's where we come in handy and where we basically bridge that gap between those two spaces. So that's have been my role in helping financial fintechs and startups actually go to market much faster.
Now, Raheel, it's been a fascinating conversation. Thank you very much for coming on the show. But before we leave, any final thoughts you'd like to leave us with?
So if you look at from an APAC market perspective, there is a huge opportunity, and we need to look at it from a very holistic perspective. Challenger institutions, be it fintechs or traditional institutions setting up a challenger bank, the critical success factor, if I can call it, is to have the right mindset and the right people and the right product at the right time. Technology should be used as an enabler rather than the driver. So technology should be doing what the business wants them to do, not the other way around.
Now, Raheel, thank you very much. And it's been a great conversation with you.
Pleasure, Brian.
I'm Brian Fernandez, and we've been speaking to Raheel Iqbal, Managing Partner at Codebase Technologies, on BizTech's C-Suite Conversation Show. This video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. Please like and subscribe to our various platforms. Thanks again for tuning in.